We got a fire one on gold long entries. I took today in New York session. Um, yeah, so the usual. Let's start off. I replayed it back to just before New York Open, just to emulate live time as much as possible for you guys to give you guys the whole understanding of what I was looking at. So starting off here on the hourly time frame, you can see last week we had a big sell-off, okay, to end the week and to start this week, coming right into this low here. Okay, why is this low the one I've grabbed? You can see multiple times we've come into this imbalance once, came into it over here, and over here. So like, I don't know, 3, 4 times we've built liquidity in this area. Okay, and then traded away. And then that's what fueled this sell-off, right? To hunt for all that liquidity. So now that we've grabbed it, what can we expect is higher prices from here, right? Whether that's to this high, or we can even end up running back up to these higher time frame kind of swing targets. But as for more intraday, let's focus on the price action that was delivered yesterday and today to get a better idea of where New York could be heading and why. So right away, what do I see? This inducement high has been respected once, twice, and we traded away. And look at the liquidity we are building at the lows here. Okay, look how the market came down, respected the lows, and traded away. Okay, now that we've traded away from that low, it tells me that we've now left liquidity here. What happens? The market comes back up, respects this high at Frankfurt Open, spikes up, leaves equals. Okay, there's a little hint for us there. Also leaving the high to the left-hand side, we'll mark that. Okay, and then sold off, took the lows. Now think about it. Logically speaking, where would it make sense for us to run to next? Okay, the only answer should be these highs. Okay, look how we've trapped buyers, and now we've left sellers in the market up here. So all we need is price to develop and look for entries. Okay, so same concept applies here. We grab the liquidity at the lows. This is in London, a couple hours before New York. We trade higher into this inducement high and respect it. Okay, we've engineered liquidity up there now. So now we got liquidity on the lower time frames at the highs, giving us more of a reasoning to move higher. Okay, perfect. Getting a phone call. All good. Okay, so again, we respect the highs. We trade lower. We'll look at the internal liquidity we've left down here. Okay, and also a liquidity block at the extreme. All right, so now we can mark on kind of where the liquidity is. So look how from this low, we came up, took this high out, price came back and respected this imbalance area, leaving liquidity here. Okay, then moved higher, printing all this like kind of micro highs, very, very small sale because we're already on the M1 right now. Goes higher, takes this internal point, leaving equals here. Okay, fix that. And then again, trading higher, respecting the highs, and coming lower. Perfect. So now we have internal points that are left. Let's see where the market builds liquidity at. So again, we're approaching New York Open. I'm just mark it on for now, just so we have an idea of where we are. Okay, perfect. So look at the market. Induces buyers here. Traps them. Perfect. Moves lower. Okay. Prince is kind of high here first. High, comes down, takes out previous low. And now we're trading higher. We're starting to run these internal points of here. Perfect. Then we take out this high. Okay. What does that now tell us? This is going to be a trap. Okay. We do not want to be buying from that. And if you look from the left-hand side, this low was printed because of this area to the left. Okay. So you can grab that low, drag it over. Perfect. Look at that. Left equals again. Okay. Everything's hinting at moving higher. And now we're approaching New York Open. So keep an eye on that time. Now we're in New York, so I can get rid of this line for us. Perfect. And look how price was essentially being held up in this area. And then finally, we get that sell off to trap buyers. Okay. So number one, look where we're trading on the higher time frames. Okay. Below liquidity. Okay, we've engineered liquidity up here, right? Induced sellers, also just trapped buyers on the lower time frames here. So entry number one, I guess you could say this is more of the advanced kind of entry, just because we're all the way at the extreme. So I understand maybe you guys aren't totally comfortable taking these type of entries yet, which is fine. But you also have a great time confluence right at New York Open. Okay, so New York opens, we get that sell off to the downside, clearing that internal liquidity. Okay, again, we can look on M1 because M5 is a bit squeezed up, but that would be entry number one with stop below liquidity block to the left. Okay, drag that over. Where are we targeting? Look at these equals we've left from Frankfurt. Also, remember we traded up into this trap area, respected it once, respected it twice. Plenty of liquidity above here as well. So you have two viable targets. 180 pips to Frankfurt equals, or 200 and we'll just say 210-ish to the further target on the higher time frame. Well, not even a higher time frame, from like the 15-minute-ish. Okay, we'll go to the 5-minute now, see what's going on. Again, like I've talked about in the past, I usually only go on M1 when M5 kind of gets squeezed up like this. So M1 can kind of just open it up for me more. I don't just sit on M1 the whole time. It's not necessary too much anymore. But then, yes, we end up moving higher. Okay, cool. Now what's going on here? Again, M5 is looking a bit squeezed up here. Like, look how big this candle is and stuff. Just open it up. I'll go to M1. Okay, so I don't do this often, but it happens. Sometimes we need to dissect the M5 a little bit more. So look how we've ran up, took our previous high. We get a pullback into this area, respect it, and we take out the next high, okay, leaving liquidity. The market sells off to grab that liquidity. Perfect. So what I was looking at initially was if we could have got an entry here in this area, we could take it up to this high. But after this high is taken out, after this high is taken out, you'd have to break even your entry because we do not want price to come back, essentially, okay? Because then this is going to be trading with structure now. We do not do that, okay? So let's see what happens, and we'll react accordingly. So we've taken out this liquidity point, and look, on a very, very small scale, look what we have right here. Little 1 minute liquidity block. Tap it, I think, right to the T, if you can see that, and then we move away, okay? So we take out high. Now, in order for us to be involved in this trade, what do we need price to do? Need it to take out this low at the least, okay? And if you look on M5, what do we have right below? Liquidity block. So how can we be a part of this trade here? One entry could be like this. Soon as the low is taken, tells me buyers are trapped. You got to cover the liquidity block right here, okay? Right where my cursor is. And again, target would be here, okay? This is the first way of taking it. So let's see how this works out. Big M5 candle comes in, spikes the low, traps the buyers. We can go into M1 to see what we have available to the left-hand side over here. Look how we've come down to take out this M1 inducement low, mitigates this liquidity block. Check that out. Taps right into this whole area, moves away. Cool. And look how we've come to this inducement high. Started to respect it, okay? Engineering liquidity. So that was one entry, which I took like this. And then I was watching. I'm going to get rid of it just so we can see a little bit more. And I saw that now we've left this liquidity block down here, okay? The last low before it is right here, okay? So I just bumped on went to the M5, and I noticed that. Essentially, as soon as we spike this low, that's another buy. Same concept still applies. Liquidity block, you want to cover the stop loss below the liquidity block, okay? And the highs up here. Okay, so let's see what happens. We come down, we spike the low. So let's move this over. Now we're entered in, okay? Stops below the liquidity block. Look at the engineered liquidity we've now left on M1 over here. And as we know, since we have taken out this low, if we do get reactions here, it's going to be what? A trap. Okay, perfect. So we'll speed along a little bit. Nice, move up. Slowly induce sellers at the high here, no problem. move up at the high. We actually don't even bother respecting it. We actually blow right through it. Awesome. Go M5. Continue managing these trades. So as soon as we take out this high, to be honest with you, now my stop loss was originally below. Originally it was below here, okay, as we know from the buy tool. Now that we've taken out this high, I can definitely manage my position accordingly. I could probably roll it to here. So essentially now my risk is almost cut in half, okay? But you see how I'm not forcing a break even, okay? Because realistically, could it get a pullback here, respect structure, and go? It's possible. It's not an entry we're taking, but it can happen. And if that does happen, what if it comes right here, tags us BE, and then moves away? Okay, these are things that are possible. So what I'll do is I'll just move my stop below this low, okay? Manage it a little bit, so I'll take a little more risk off the table, and then we let it continue, okay? Again, Frankfurt equals, and the high from the left that we've been respecting. So let's continue on with this, and look at that. So entry was here, target was hit here, so it's about a 1 hour trade. And check out the RR and the target, 160 pips, about roughly a 1 to 7, 1 to 7.5, depending on your stop loss size. But yeah, 1 hour, that's all it takes. This trade right here can make your whole week up. Okay, you have 1% on this trade, you can make roughly 6-7% in a single trade, and call it a friggin' week. Honestly, with these kind of trades, these are perfect. These are textbook, right into engineered liquidity. Okay, look, notice how we've left liquidity at the highs, trapped the lows, and just simply, it was kind of sluggish, and the reason being is because it's inducing sellers on the way up, right? Every time we get a sell off, it's just inducing sellers, right? Like here, these are all areas that sellers are looking to sell from, so it gives them false reactions, and we're simply just buying into all of that liquidity. Okay, honestly, a great study. I hope you guys enjoyed this one. Solid trade, right? But yeah, hope you guys enjoyed. I will see you guys on the next one.